Hello and welcome everyone to 10 Capital Network's quick pitch today. We have some great pitches presenting you, as well as having featured Hall Martin here. We're going to have to start off with Enamel Pure with Nathan Monty, followed by Simple Labs, then Ticket Rewards, TSP Therapeutics, then Aether Holdings. Now, Nathan, if we want to go ahead and start us off, go ahead and share your screen, and we'll begin the presentations. Oh, Nathan, if you want to turn on your mic, we can't hear you. And then feel free to go ahead and start sharing. Perfect.
Nathan Monty, co-founder and CEO of Enamel Pure. Thank you for listening to the presentation today. Enamel Pure is tackling the preventive dentistry market, commonly known as going to your hygienist. We're coupling a laser and imaging technology to advance the technology level from about 50 years ago. Don't usually recognize that the preventive dentistry space is $16 billion for teeth cleanings, fluorides, and whitenings. It's 160 million people get their teeth cleaned every year. Clear aligners is another 6 billion. It's a total of a $22 billion market. Worldwide, it's 50 billion. This is an easy slide. Everybody knows about teeth cleaning. It's noisy. It's
well, Nathan, do you want to share your screen? We can't see your slides yet.
It says I'm sharing.
Try one more time, my friend. There we go. Now you're good to go. And then if you want to put that in presentation mode.
Okay, all set. Sorry about that, guys. So Enamel Pure, I don't need to repeat this too much. Just it's preventive dentistry, which is 50-year-old technology. It's 160 million teeth cleanings a year. So it's a $16 billion market plus another 6 billion for clear aligners. So it's a giant market. It's the largest market in America for the simplest medical procedure. Everybody knows about getting their teeth cleaned, getting their fluoride rinses done. Also, the diagnostics in dentistry and oral health are virtually non-existent. It's just manually having a hygienist or a dentist look at your teeth or look at your gums to see how things are progressing. So Enamel Pure is introducing the Loon laser. We had our first patient, which was me, last Friday. The video should be available today or tomorrow. So we use the laser for the clinical procedures. We clean the teeth, we harden them to replace fluoride in the dental office, and we also have a whitening mouth guard. Secondarily to that, there's also a camera connected. The camera and the laser look through the same mouthpiece. So as the hygienist moves around your teeth, cleaning your teeth, the camera is taking images. So simultaneously, you get a 3D full color image of your mouth, and I'll explain why that's important going forward. The cost of the device is about $35,000 with a few extra hand pieces. It's a couple thousand more, so it's $750 to $800 a month. So it's a very reasonably priced machine. So the advantage here is mostly the teeth cleanings are twice as fast. A 50-minute appointment can be taken to 30 minutes. Of course, it's wonderful for the hygienist who get carpal tunnel. All of the rubbing and scrubbing and scraping are gone. It's wonderful for the patient because they're in and out of the chair quicker, as well as they don't have any pain or bleeding. And it's wonderful for the health system because your teeth get fully clean for the first time ever, as well as killing all the bacteria. And then after you clean them, we can harden them. That's what's in our office fluoride varnishes are supposed to do, but they work very well. Our laser hardening works wonderfully, and it's up to 10 times harder than fluoride. And then we have a whitening mouth guard with a battery in it. You pop it in the patient's mouth at the end, and they drive home. So it's quick and easy along the Invisalign model. And then the camera takes the 3D digital image of your teeth and your gums. So you get a 3D and a 2D image, and that 3D image can be converted to a measurements file to define a course of clear aligners to straighten your teeth as well. So the advantage here is it's the most robust image data set ever created in dentistry. So there's two reasons that this works well. Number one, the FDA requires the same camera imaging, the same AI software to do any sort of diagnostic suggestions to the healthcare industry. Second of all, because we're doing the imaging during the teeth cleaning, we have 160 million people getting in the chair to have their teeth imaged. So every time they go in for their teeth cleaning, every six to 12 months, you get another image. So after a couple of years, you can compare them. We have no idea what average gum recession is. We have no idea what average enamel loss is. So after a few years of imaging people's teeth during their cleaning, the AI can compare and find whether you're above or below average for gum recession, teeth cleaning. It can find cracks in your teeth. It can find night grinding. It can find gingivitis. It can find over and over again. Dentistry, oral health is ideal for AI because all of the diagnostics are done via what you see, what you look at, and that's where AI excels. So our roadmap is we've done the clinical treatments in 2024. We have FDA approval, so it's actually a clearance. In 2020, this year and next, we're doing the camera. So the team is starting the camera design and implementation now. Next year, we'll integrate for the AI, and beyond 2026, we'll start integrating those same dental records with your medical records to link oral health with medical health, like tooth decay with heart valve problems. Dentistry is old school. It's a very preventive dentistry, a very large niche. There's 220,000 hygienists. We know exactly where they are because the U.S. Census tells us where all the dental offices are. We use distributors, Henry Schein, Benco, and Medicine. We have a signed distribution agreement with all three partners. I'm in Chicago at the Chicago Midwinter Fair. I'm meeting with Henry Schein, Benco, and Medicine for the next 2 days, and a number of journal articles. As we've just done our first manufacturing run, we're heavily promoting it at the moment. The manufacturing is done by a contract manufacturer who ships directly to the dental office. So Enamel Pure doesn't have any costs in setting up the sales distribution system, doesn't have any costs in setting up the manufacturing. It's very fast and cost effective. I'll go a little bit faster to understand the device. We're doing just the laser, the camera, the mapping for clear aligners. We do the regulatory and the IP in-house. That's our portion. We use partners. The reason we use partners is so we can integrate more fully and more quickly into the dental field. So the sales are all done by a partner. The AI software done by partners. Clear aligner manufacturing is done by partners. Even the practice management, the longitudinal studies are all done by our partners. And how it works is you put the Loon system next to the hygiene chair, and the hygienist just waves the handpiece over the teeth about a quarter inch, 5 millimeters away from the teeth. And then they just go across each tooth surface for 5 to 6 seconds to kill all the bacteria and remove the plaque. And the camera does the imaging at the same time. Then the practice management system in the dental office talks to the Loon system, and we upload those images to the practice management system. We don't have any HIPAA requirements because we get the patient number from the practice management system. We never know who the patient is, we just know their number. And then the practice management system, that's our partner. That's Dentrex or Fuse or Open Dental. They talk to the cloud to get the AI done. They talk to the dental practitioner. They have the HIPAA requirements and the clinical requirements going forward. So we do the clinical procedures, we do the imaging and the filing, and then we're just doing Wi-Fi in the office to make it a seamless transition into the medical field. Product Resources does our contract manufacturing. We don't have any costs there. We have no competition, just the existing mechanical tools. My business partner is a patent lawyer. We've got 23 patents filed. We have 7 issued. And we've got 6 more in work. How do we make money? We sell the equipment at about a 50% margin. We have recurring revenue because we charge per cleaning, per purification, and for our whitening mouth guard. So every single procedure up to 160 million a year, we get paid. And then the imaging, the 3D imaging, we get paid when we upload that for AI diagnostics. And we also get paid when we upload the measurement file to define the clear aligners. I'm Nathan Monty. My first company was Light Laser. That was laser marking water bottles. We sold that to Videojet, a member of Danaher Corporation. I then started Convergent Dental. That's a company for drilling cavities. That's in Waltham, Mass. I left in 2017. They're at about 25 million in sales. Hopefully that'll be exiting via IPO in the next 12 to 24 months. So they're trying to get to 40 million in sales. They should get there in the next 12 to 24 months. And my co-founder is an expert in laser processing and imaging. He's also a patent lawyer. And then we have your traditional experts in regulatory and electronics and clinical and manufacturing in-house. The patent slide, you can look at that later if you'd like, but 23 issued, 23 filed, 7 issued. It says 4 allowed, but it's 7 now. I haven't updated the slide. We had 3 more come through in the month of January. And then we've got 6 more and will work as we build out the imaging technology. So the FDA clearance was in March. We sent out the contract manufacturing specification in May, and then we got our bids back in August, September, and then we did our first pilot manufacturing in December, and we're doing our first manufacturing run of 10 units at the moment. The first clinical treatment was me last Friday. Went well. So we have a super seed round. It's a $1.5 million raise, 8 million pre. It's 150. I can stretch that a bit. And then there's a Series A coming up in the June timeframe when production starts and revenue starts, and we'll do a much larger raise at a $32 million pre. So that's it. Thank you for your listening to me, and sorry for the initial problem with the slides.
Perfect. No, thank you so much, Nathan. Now, if we have any questions from our audience or from Ed and Rajeev, we'll start off with Ed. If you have any questions, go ahead and take the mic. All right.
No,
and,
I don't. I'm
Rajeev-
sorry.
Oh.
I don't have. I'm sorry. I had the mic. It took me a minute. No, I don't have any questions for him right now. I've seen this a couple of times. I think this is an excellent opportunity. And he's pitched at our ABN events because of 10 Capital here. And I know there were several people very interested in this. Thank you.
No, perfect. Rajeev, if you have any questions or feedback, then the mic floor is all yours.
Same, no questions from me right now. Sorry about the unmute there.
Perfect. Call. Welcome to the webinar. Any questions from you?
Sure. Can you talk, Nathan, about the business case here, the model? How much money do you make off of each dentist or dental practice? What's the numbers look like there?
Also, we make 50% off the equipment when we sell it in, but that's really a small portion, right? So the typical hygiene office will treat 6 patients a day times 4 days. So it's about 25 patients a week. So we will be making $125 a week off the teeth cleanings. And then we have another somewhere around $50 a week off the hardening, and then another 50 off the teeth cleaning. So we're making somewhere in the neighborhood of 200, 225 per week, of course, times 50 for 50 weeks in the year. And then when the AI processing comes through, we'll be selling the imaging, a couple $100. The AI imaging gets huge monies. So we'll be selling that for a couple $100 per patient. So, over 5 years, 80% of our revenue is recurring.
And what does the dollar figure say per year per dental practice?
It works out to, it grows, but obviously as we sell to more dental practices, it's at 5 years, it's 100, and I'm doing it in my head, Hall, it's 150 million. And we're in about 2,000 practices. I'd have to do the math off the top of my head.
Okay. So it sounds like you're making good money on volume there. It sounds like it's not that much. Is insurance covering any of this, or is it all out of pocket by the patient?
So the cleaning is by insurance. Our largest investor is Delta Dental, the largest dental insurance company in America, and they've promised to fund the laser hardening treatment code as well, about June of this year. So the hardening and the cleaning will be funded by the dental companies, and then the whitening is not, of course, that's out of pocket.
Okay. And how does it benefit the dentist as far as their paycheck goes, so to speak?
So the dentist makes, you could go almost twice as fast, 40% faster, sometimes 50%, cleaning the teeth and hardening the teeth. So what used to take, 50 to 60 minutes, depending on the office. Some offices have 50, some have 60. You can have a $350, $400 treatment, in 30 minutes. So you're doubling your revenue over 6 patients per day. So it's a lot of money for the dentist. And of course, once the AI starts, then oral health will expand, exponentially 2 or 3 times, because if you tell people in their 20s or 30s, if you don't do something now, you're going to have gum recession, or you're going to lose your teeth, that they'll do something about it. It's just there's no indication at the moment where your oral health is heading until you get there. It's all done. Once you have a problem, they try to fix it. So the AI, introduces true prevention, diagnostics, and dentistry.
Okay, great. David, I think there's one last question in the chat box.
Yeah, no, we have a
Sure.
question from Scott Johnston. What happens if the laser hits the gums?
Oh, nothing at all. So that's kind of a technical thing, but the laser's tuned to couple into your teeth. So it couples into your teeth and heats your teeth. That's how we vaporize the water in the plaque. But it's also tuned to couple into the water in your gums. And there's just a lot more water with a lot more heat capacity. It's very low power. It's less than a watt, if that means anything to anybody. So it looks quite large, but it has very little power. It's quite large because of the tuning of the wavelength that we need to do to make sure it cleans your teeth with doing no harms to your gum or your tongue.
Perfect. Well, thank you so much, Nathan. Aside from that, any good contact information in case anyone has any questions or anything like that, a good email for people to get you at?
Yeah, sure. It's nmonty at enamelpure.com. And then you can also just go to enamelpure.com, and we'll have the video of me being treated as well as showing the device. It was supposed to be done yesterday. They're running late. So I asked them to finish yesterday so I could show you. But if you go to enamelpure.com, you'll see the video, our first treatment. It's very exciting for us.
Perfect. No, well, thank you so much, Nathan. That was Nathan Monty with Enamel Pure. Now we'll be moving on to Simple As with Mike Sloan. Mike, if you want to go ahead and share your screen and take it away.
Yeah, let me get that set up. Can you guys see that?
Yeah, looking good.
All good? Okay.
Perfect.
Ready when you are.
Floor is
Hi
yours.
everybody. Going to move into the world of wine and spirits now. So I'm Mike Sloan. I'm the founder and CEO of the company Simple Labs. We make a device called Cogni for wine and spirits. I grew up in Kentucky. I now live in Napa Valley. So for years, distillers and winemakers have become friends of mine. And I'm very passionate about helping them with a very big problem they faced for a very long time. And that is that every day the distilleries and wineries are unknowingly throwing away potential revenue in the millions simply because they're not tracking the quality of what's going on inside their aging barrels. For bourbon, this adds up to over 14 billion a year simply because they're misclassifying these barrels. We're here to change that. I want to talk to you about this idea. So imagine you're running $100 million bourbon operation and you're completely blindfolded for 4 years. You don't know which barrels are holding your premium product, or which barrels have stuff that's barely sellable, or anything in between for that matter, until it's too late. But that's how distilleries operate today. That's why they're losing millions. And that's also why I developed Cogni. So Cogni is the first real-time AI-powered barrel monitoring system. The idea is pretty simple. Instead of them waiting for 4 years and hoping for the best, Cogni is delivering these instant insights on barrel quality, and it turns their guesswork into data-driven decisions. And you can see some of the parameters here, by the way, that it's tracking in real time for bourbon in particular. So why now? Right now, the global, alcohol beverage is still continuing to grow, but aging is archaic, really, at the moment. Industries like banking and healthcare, manufacturing, they digitized decades ago. And if anybody remembers banking before it digitized, it really sucked. But that's where spirits is right now. Billions are still being lost because their current way of selecting barrels is based on random sampling. We're giving them the first true AI-driven optimization. It's $1 trillion market right when they need efficiency the most. The ROI is also very simple. For every dollar they spend on this solution, we give the distilleries $3 back. It's not a prediction, it's real data. They're getting over 320% ROI no matter what scale you apply this solution at. Market strategy. So our immediate TAM is $10.6 billion for bourbon and wine. And the thing is, we're not just building a product. We are seriously redefining an entire industry with this tech. Bourbon is a beachhead for us, but the same technology that we have applies to tequila, to wine, and beyond. It makes us globally a $1.6 trillion opportunity if we apply it to all spirits. Traction to date. So we've already signed 4.9 million barrels to an agreement for early adoption. That's 2 major distilleries in Kentucky. Look, investors are not just betting on an idea here. They're backing a company that's already gaining industry-wide traction. We have a number of VCs as well that I'll get into that have already started to want to subscribe to our round, but for that matter. But the other thing too, as far as our competitive advantage, we have a whole bunch of these competitive advantages, but the main thing is we're not selling sensors. We're building an AI-powered data ecosystem for the industry. It's the first of its kind. The more barrels we monitor, the smarter the system gets and the harder it gets for anyone else to compete. We have a wealth of patents. We have a wealth of continuation patents, some of which have already approved or are in process of approval, for that matter. Our ask is a $10 million Series A equity round. It's not to prove out a concept, it's about scaling a proven solution. So with the capital we're going to get from this, we'll go from early adoption to industry standard. We have several VCs I'd mentioned that are globally located that are already interested in getting involved in this. They get this. There's one in Spain in particular, one in Brazil as well. They know what this is about. They know why this is needed so badly across the industry. So yeah, there's a lot of interest, needless to say. Our clear path to exit is a wine and spirits conglomerate. We believe our potential is somewhere between 300 million or 1 billion plus. And also our current industry
Mike, you there?
Thought I was the only one that lost them.
No, honestly, thankfully your camo was what gave it away that he was the present one, not me. All right, well,
Give him a minute, see if he comes back.
then we go to click pause. For the audience, again, feel free to ask any questions in the chat, and we'll be happy to ask them during the Q&A session. We do encourage you to ask as many questions as you like.
Looks like he dropped off.
Okay, so let's go ahead and move into our next presenter, and we can continue off when he comes back. We'll have ticket rewards with Jason Sheets. Jason, if you are here, my friend, go ahead and put up your slides. And we
Excuse me,
will-
guys. I just want to let you know that I need to take a personal call here real quick and I'll be back on, but I'm going to be off for a second.
No worries. Oh, thanks for letting us know. All right, Jason.
I am going. Thank you very much.
Oh, there you are, my friend. So sorry. I was looking for you. I was like, where's Jason? Perfect.
All right, we all good?
Take it away.
Thank you. Appreciate it. We got a smile in the beginning with teeth, and then we just had a drink of whiskey, but hopefully Mike comes back because his product's great as well. We're about ticket rewards. I'm actually going to go through the slides relatively quickly, but because we have some great news to share with you that just came in today. So we are basically your Uber connected company in live entertainment. We actually acquire consigned tickets from your Andre Bocelli to your New Kids on the Block, whether you're a Yankees fan or a Red Sox fan, or whether you're involved in Broadway, family shows. We actually are over 65 markets across the United States. What we do is we tie our ticketing inventory in with very large brands. So the brands we're working with currently are Max, HBO Max, Celebrity Cruises, Royal Caribbean, Hearst. We basically are their loyalty program for basically live entertainment, which then goes out to the consumer and gives them a benefit of a memory. And then we actually have a live experience the consumer attends. They get an emotional connection back to the brand. The brand gets higher engagement and retention, and then it reduces churn. And doing so, in creating this model, we saw that there was a big opportunity for us within the loyalty and reward space, because many brands are looking for our chase within engaging and retaining customers. They're trying to maximize their revenue at the lowest cost possible. Live entertainment is actually untapped for most brands. Fortune 500 companies who are looking for opportunities for their customers only can get a small number of opportunities with them, when we actually can do most theaters and venues nationwide. There's a high cost to get in there, even though there's abundance of tickets to be used. This is a keynote from Warner Brothers, who owns Max, was noting that the biggest thing they're worried about is churn. We just actually worked with them in a pilot, and we're continuing with them, in which they had a 15% increase with people on their win-backs versus actually discounting their own product. So our solution basically is a mobile-first, co-branded, white-labeled redemption platform. This is all currently working with over $500 million worth of consigned preferred priced inventory, over $1 billion of marketplace inventory, as well as over 35,000 events. It can be seamlessly integrated into a reward program, or they can actually drop people off to us. It drives high engagement. Most of our partners, we often are the top thing in which consumers are actually engaged with, because of the brands we work with, and it creates memorable experiences. The marketplace for tickets is quite large. Everyone loves going to a show or going to an event. It's obviously very hot right now, post-COVID, and then just people really, really enjoying the memories that they're creating at live events. The reward space is even larger than this TAM that we're getting into as well. So what our product is we've created live entertainment as a service. One of the things that we're actually moving into, and this is why we're raising funds, is that we've created a product where we can give $25 worth of credit every single month if you're a member for a low-cost platform. Again, I just highlighted the different things on it. We are full customer service and full ticket fulfillment for these brands. One brand that we worked with right now is Hearst, and the San Francisco Chronicle and Houston Chronicle, in which they have seen 50% of the people active in our product are people they thought were going to unsubscribe. So we're actually reducing their churn off of it. It's fully a customizable ticket redemption platform. Basically, they can actually have us as the platform, themselves as the platform, or a combination of them with the ticket rewards being powered by it. We have our own inventory management system that overlays multiple APIs, whether we're working with inventory from Broadway, Las Vegas, or many of the sports teams nationwide. This is what our product looks like in a sense to go to redeem a code. It is something that we are continuing to update constantly. It basically gives you the opportunity to buy any type of show you want in the United States, and we will be expanding to Canada and the UK probably in the next year. Current clients include Hearst, Max, Royal Caribbean Celebrity, United Mileage Plus, about 17 other newspapers because we work well in doing a deals platform for them on a localized basis. We're actually working with a lot of perks companies now with using points as well. This is just revenue off of these companies working, but we also have about $2 million worth of marketplace and ticket redemption revenue coming as well. This is a client example. So when I was talking about Max, they are actually giving $25 worth of tickets every single month as a perk. It went well for 6 months, so they are now actually expanding into this for 2025, which we're very excited about. This is an example of just click on get tickets and you're actually saving 40% for a show in San Francisco. We don't pay for any of these inclusions. This is actually something they're giving to us because this works. This is what I'm most excited about to tell you we found out today. This pipeline is actually becoming more and more real. We had a conversation with Lyft today in which they basically are budgeting a $2 million budget for us for starting in July of 2025. It is a reoccurring revenue model. We'll probably make $175,000 a month for just servicing their clients of about 35 million members, users a month, in which they're going to launch out to 10 million in the beginning. We also found out from TravelZoo that we'll be part of their platform here shortly. We do believe we'll make about $250,000 off of that with a recurring revenue of about $20,000 a month. 1-800-Flowers is actually launching a program with us in a week based off of a test, and we do believe that'll turn into about $150,000 a year with about $12,000 a month as a program. Here's our revenue models. We have the subscription base, which is basically you per member per month program. We usually charge about 3 cents per member, or we turn it into a service opportunity, much like we're going to be doing with Lyft. We actually curate deals in which we make 20 to 40% revenues off of the tickets that we sell off of our deals platform. You can also have our product of $25 or $50 incentives that they pay $5 to $10 for to redeem on our site. And this is both a revenue driver. We make about 80% margins on this product. And then we recently started advertising revenues with some restaurant chains on our site as they want to capture those people as they are buying live event tickets. Our financial projections are probably going to be changing here shortly, and we're going to be closer to getting cash flow positive here at the end of 2025, especially since we have this very large partner who's about to join in making us very successful going forward. Here's our team. Myself, I've actually been developing in the live entertainment space for about 20 years. Gentleman on the partner, Cole, on our partnership side is amazing at actually going after enterprise level brands. He has no problem speaking with the CEOs to the decision maker within the company for what needs to be done. Paul Bosch is also our co-founder and COO, who has actually done a number of different exits within the space, working with Broadway.com to also Entertainment Benefits Group. And Kristen does everything to put this all together for us. Here's what our investment opportunity right now is. It's $2 million that we're raising. We already have 320 committed. The $10 million cap and a safe note. But as you can just see on the reoccurring revenue basis, we're basically be more than valued than this right now once we hit June with this partnership coming on board. So we do have a number of investors thinking of investing quickly, and we actually have one person thinking to take over this round. And then our biggest thing is we believe we'll be selling in the next 3 to 5 years based off of our gains in the space. We actually, in raising funds right now, one of our strategic partners actually asked to try and buy us and put in to acquire us now, seeing the opportunity. It is going to be presented to us shortly. We do not think we're going to take it based off of the positioning that we're going to be doing. We do believe that we'll probably be moving towards a $100 million valuation within the next 18 to 24 months, if everything goes correctly. The reason why we need money is we need people, we need marketing, we need to actually take our opportunity to go out and reach more people based off of the small team we have right now, 7. So we've been actually very strong in getting a lot of early adopters and then these big brands to take over. I think I went fast enough. So is there any questions?
Wow, Jason, no, great presentation, great pitch. We'll start off. Ed was taking the call, so Rajeev, if you have any feedback or any questions,
No,
the
I
floor is
don't
all.
at this time.
No worries. Then Hall, we'll take it with you. Go ahead and any feedback or questions would be great.
Sure. What's your competitive advantage? What are you doing that your competition is not?
So interesting enough, so Lyft did their due diligence. They just announced they were talking to us today, and they actually looked at all ticket providers. Nobody's actually giving back to the consumer as much as we are in the platform we're giving. So this $25 value and constant value that we can give is actually very compelling because we're actually eating into our own margin. So, but not enough in the sense of giving back all of it. So every time someone redeems, we actually make a little bit. Because we're actually getting a service fee based off of tickets, though, we actually have a lot more room to play with. Our goal is not to be a big brand out in the marketplace. Ours is to service the brands we're working with. So our attention is to those brands. It's not that we're going to try and get a customer and then repurpose more marketing. It's actually that we're servicing the companies we're working with. So this is not anything anyone else is doing in the marketplace.
So how much work did it take to sign up Lyft? How many hours did you put into it, or how much cost?
Sure. So this is one of the reasons why we're doing our raise right now. It's been a long sales cycle. It takes about 8 months for us to get as far as we've been so far. The good news though is it's shortening. When we actually started with HBO Max, more people started coming in our door, and we've actually signed some brands since we started with Max, just based off of them seeing the $25 going out. It can be anywhere between 3 to 5 months. Whataburger, which is highlighted on here, it's more about timing. So it's in the second half of the year in which they're actually going to be doing a buy and get promotion with their $25 gift card. So buy $25 of a gift card, get $25 worth of live event tickets.
Great. Anybody else have a question at this point? In the audience?
So sorry, I was getting Alberto. Alberto is next. Making sure. Thank you for that, Hall. Well, that was a great presentation from Jason Sheets with Ticket Rewards. We'll now move on to Alberto, who I hope is there he is. Perfect. We got you in here. Alberto with Alberto Paz with TSP Therapeutics. If you would love to share your screen, and the floor is yours whenever you want to go ahead and get started, Alberto.
Should we go with finish up Mike Sloan's first?
Oh, did we not finish? Oh, I'm so sorry. My bad.
I think he was about 3/4 of the way through. Mike, if you could
Yeah,
pick up
I
say
got
2
kicked
slides before the
out.
ask.
Yeah, I got kicked out at some point. I'm gonna pick it up on traction, I guess, and just do it from there. But I think people heard I'm assuming people heard the first half. But let me share. Not exactly sure what happened there. Okay. And let me try to, 1 second. Share. Try it again.
And as that's coming up, yeah, go ahead, Mike.
Yeah. Sorry, the poll is coming up there. There we go. Can you guys see that?
Yes, we can.
Are you seeing my slide or are you seeing the small version of it?
We see competitive advantage, so let's start from there.
Okay, perfect. So the competitive edge, so we're again we're not just selling sensors, this is an ecosystem for the industry. So with every sensor we add and every new barrel we're adding to this solution, the smarter the system gets and the harder it gets for someone to compete with us. The other thing I wanted to mention with that is we do have a wealth of patents that have already been either approved or in process. The other thing is we're in the middle of a $10 million Series A equity round. With that, it's not really about proving a concept, about scaling a proven solution that we have. With the capital we're going to get from this, we're going to go from early adoption to industry standard. We do have a number of VCs that have already looked at subscribing to this. Several are international. One is Brazil, one is Spain. They get it because of the the wine and the spirits connection there, pretty deep connection there between them. Our clear path to exit is definitely a wine and spirits conglomerate. We've been contacted by these guys, a number of them. I get contacted every week by some of these guys asking when we're going to market. Potential for this is somewhere between, we think, 300 million and 1 billion plus. Trends are showing our multiples are likely going to be somewhere between 8 and 12. And then why us? Well, we have a really highly experienced team within the industry and this industry and others for that matter, and a lot of Internet of Things and startup experience as well. On top of that, we do have first mover advantage. We got the technology, we got the traction, we got the market timing. The only thing missing is that we need investors to help us scale. So that's obviously why I'm here today, is to talk about how can anyone who would be interested to be a part of this transformation. There are a lot of people and a lot of interest already. I would just say there's a lot of momentum on this already for our Series A. But I think that was all that I had left, to be honest.
Okay, well, perfect. No, thank you so much, Mike. That finishes us off. I don't know. Ed may or may not be back, so we'll start off with Rajeev. If you have any questions or feedback, we'll start off with you.
Thanks all, but no questions.
All right, Ed, if you're back, then any questions or feedback? Or if you are not back, then we'll move it on to Hall. All right, Hall, take it away.
Sure. Yeah, great presentation, Mike. Sorry for the technical issues there. I think the question I had to do with the market that you're in. What's your competitive advantage? What are you doing that the others are not?
Well, there's a lot of things that we're doing. There are people that are doing one or two things in either wine or spirits, but we are doing quite a number of things across the board that they are not. We're the only one that's wireless. We're the only one that's continuous. We're the only one that can give them data trends day to day for years. And we're also the only ones that have a SaaS-based model that can provide this at the price that we're providing it at and the volume of devices we can provide this at, compared to others who have tried this, and most of them have failed already. But yeah, we're a very different animal compared to what's been done before or is currently being done.
And what moat do you have around the business? What keeps other people from doing what you're doing once they figure out it's working?
Well, we have, like I said, we have a wealth of patents that have already been approved nationally, internationally. We have a lot of IP and a lot of novel ways that we're doing as far as our engineering and our R&D. That expands every month. The new features that we're adding to these devices, especially on the bourbon side, which we're leading with, it's giving us quite a moat. I mean, we have, I can count at least probably 15 different things that we've had to do, very novel and very different than anything that was tried before. So there's a lot of secret sauce behind what we're doing to make this work. It's been 5 years of work to get this to this point.
Wow. Okay, great. No, that answers my questions. If there are any other questions in the audience, please put it in the chat box before we move on. With that, go ahead, Dave.
That was pretty good, Hall Jinx. No, with that being said, we'll move on to Alberto Paz with TSP Therapeutics. So Alberto, that being said, go ahead and launch your slides, and the floor is yours whenever you're ready.
Hello, my name is Al Paz, and I'm the co-founder and chief executive of TSP Therapeutics. Over my long career in the pharma industry, I have rebranded, relaunched, and repurposed half a dozen products that became leaders in their therapeutic category. My intention and the intention of my partners is to do it again in cancer therapy, and our mission is to save the lives of the millions of cancer patients that become unresponsive to immunotherapy simply because their immune system becomes exhausted. We intend to do this with a marvelous immunostimulant that is backed by 30 years of scientific research, including efficacy and safety data in 200 cancer patients. And as you can see in this slide here, our product, when added to immunotherapies, can eradicate lymphomas that are resistant to NK-based immunotherapies like interleukin-2 and carcinomas that are resistant to checkpoint inhibitors like Keytruda and Opdivo. So we believe our product will be a game changer once we confirm this xenograft model trials in humans in small proof of concept trials. When we have that information, we'll be in a great position to compete in the cancer immunotherapy market, which next year is projected to reach $300 billion. Our plan is only to target patients that stop responding to checkpoint inhibitors. So that's only about $75 billion. It's a large market, highly focused, very high unmet needs, and no direct competitors. Because we're relaunching and rebranding a product that was originally approved but never commercialized in 2008, we have two different pathways, or gateways, if you will, to commercialize our product globally. We can come into the United States, spend $100 million, take 7 years to get to market, or we can go through Europe, spend $5 million to get to market, have an exit in less than 5 years, and still get to $1 billion exit opportunity at the time of exit when we file an IND. So to us, it seemed like a pretty clear path to use Europe as a gateway. See, the reason we can put the product on the market in Europe so quickly is that it's already approved, even though it's not commercialized. It's a subcutaneous formulation. The original product is a subcutaneous formulation. So we can put the product on the market without having to do any clinical work whatsoever. And yet we will have access to 3 decades of scientific research to market the product. We anticipate that with our partners that we will retain once we get approved, that we will be able to generate between $8 and $15 million in sales right out of the gate with a subcutaneous formulation. This formulation, this amount of money, then we will use, as I'll show you in a minute. But a question you might ask is this product still relevant today since it was launched so long ago? Well, the fact of the matter is this product is even more relevant today. The evidence we have available, which is very new, is that we double the probability of curing acute myeloid leukemia in patients and double the probability of being alive 5 years from now. We only have, after 5 years of treatment, we only have one direct competitor in this space. It's called Onureg. And when you look at the results in the Onureg trials compared to best supportive care, as you can see in these slides, the difference in the cure rate is non-existent, and the survival results are pretty much the same. So why spend $500,000 in this product when you can use our product and double your chances of being alive? We have already identified 4 companies in the acute myeloid leukemia space that once we start rolling with our plan, are excellent acquisition targets for us because they're already in the space and they could probably benefit from using a product like ours to shore up their portfolio. Once we start generating revenues, as I said before, we'll use the revenues from AML ex-US to develop an oral formulation to increase the appeal of our product and also to strengthen our patent position. We'll also do proof of concept trials in solid tumors in patients that are partially responsive to checkpoint inhibitors. All this information we will then use to file an IND in the US and ex-US that will give us breakthrough designation and accelerated approval. This means we can get to market everywhere in the world in solid tumors in that $75 billion market with doing trials with maybe 25, 50 patients and in less than 3 years. At that point, we believe that any one of these companies that you see here that are making the manufacturing checkpoint inhibitors are going to want to license us or buy the company so that they can gain exclusive right to an amazing product and gain a competitive advantage over their competition. So we're giving angel investors the opportunity to invest in a convertible note of 6% interest with 20% discount and a valuation cap for the company of $7.5 million. We will use these funds to strengthen our intellectual property, develop the market with KOLs, start promoting the company. Right now, we're working on stealth and apply for non-dilutive grants to conduct clinical trials and manage our operations. Jeff Miller and I are co-founded TSP Therapeutics to take advantage of this exciting opportunity. We have worked together before several times, rebranding, relaunching, and repurposing billion-dollar brands, and we have the experience and the determination to do it again. We also have a full external team of experts that we have identified that we're ready to hire the moment that get the proper amount of funding. But of course, as money becomes available, we will keep adding folks and the leadership roles within our company. So if you would like to save the lives of cancer patients, have a nice, attractive investment with a low risk, if there's such a thing in biotech, I invite you to join us in our quest to save the lives of cancer patients that have stopped responding to immunotherapy and help us knock out immunosuppressive cells. Thank you for your attention.
Perfect. Thank you so much, Alberto. On that note, Rajeev, do you have any questions or feedback? We'll get started with you.
Yeah,
Move on to Ed.
I've seen this deck before, but I don't remember now. What's the overall market size? Do you have that somewhere?
Do you mind repeating the question?
What's the market size that you're addressing here, your TAM?
TAM is in 2026, $300 billion. That's how big the market is expected to be for cancer immunotherapies, and they're less than 50% effective. So that's why we take it from TAM to a serviceable, addressable market. That is about half of that. And then eventually we just narrow it down to the 75 billion patients, dollars of patients on checkpoint inhibitors that are partially responsive. They don't actually have to fail. They can just be partially responsive.
And how many patients does that correspond to?
Well, probably if you added worldwide peak sales, peak penetration, is probably in the range of 1 million patients.
Okay.
About 600,000 or so in the United States.
Okay. Thank you.
Perfect. Thank you, Rajeev. Ed, any notes from you? And if we're still on call, then Hall, take it away.
Yeah, so what's the mechanism of action here? What exactly is it doing that's it's already been approved, but just didn't know what the mechanism was?
So what the product is doing is binding to immunosuppressive cells that render cancer immunotherapies ineffective. And as it binds to those cells, It blocks the production of toxic substances that destroy the immune cells in your body that fight cancer. And of course, if those things are destroyed, if your defense mechanism is destroyed, then cancer immunotherapy cannot work. So that's the basic mechanism of action of our
Great.
product. And that has been documented over 3 decades, including in clinical data, where we boost the efficacy of ineffective doses of immunotherapy.
Why has it not been commercialized before now?
Oh, it was a sad tale. The product went from one bankrupt company to the other. And then the final bankruptcy happened in 2018. We started getting involved with that company in 2019 and 2020. And here we are. We spent a lot of time redefining the market to create an opportunity for this product that is not readily apparent to someone that has not studied it. And we have now filed 2 patent families that will protect the use of our product in those patients that I just described to you.
Right. Is there a particular ideal patient for this therapy, and what would that look like?
Well, the ideal patient is going to, the ideal patient is somebody that is partially responding to cancer immunotherapies and can benefit from boosting the efficacy of that therapy and so that the tumors can be eradicated. Now, in AML, the initial indication, it would be patients who are not candidates for stem cell transplants or just refuse it, which is about 50% of eligible patients. And in those patients, we double the probability for a cure. So it would be any patient under the age of 60 that has AML that would like to live. I
Okay,
imagine that would be all of them.
I understand. Well, good. Well, thank you for that. Appreciate the answers on that.
All right. Well, thank you so much, Alberto. That was Alberto Paz with TSP Therapeutics. We'll now move on to Aether Holdings with Frank, Sid, Woody, Dorelis, and Nicholas Lynn. Sorry if I butchered your name, but tried my best. And I believe, was it Frank who's going to be in charge of the slides?
Yep, that's it.
Awesome, Frank. Well, then take it away. Go ahead, and the floor is yours.
Thanks, guys. My name is Nicholas Lin. I'm the CEO of Aether Holdings. Happy to be presenting to you guys about what we are doing today with my team, Woody and Frank Sid. Next slide, Frank. So regulatory disclaimers here. And so Aether is a financial fintech company. We offer proprietary research analytics data and tools for our users. Our users comprise of constitutional and retail investors, and we seek to merge human expertise and machine learning and AI capabilities to empower investors. Next slide. Our mission is to empower investors, and we seek to do this through 4 different ways: data processing, tools, market analysis, and strategic insights. We are dedicated to provide our users with a combination of technology, equipping them with insights and tools to make financial decisions. Next slide. I'll pass the floor to Frank Sid, our Vice President of Business Development, to further elaborate on the company.
So our vision and also our mission, as Nick has mentioned before, is empowering investors. As we all know here, and I think the theme in general for even the entire presentation so far has been AI technology. This is transforming every single industry, and markets are shifting faster than ever. Investors right now rely on lagging indicators, inefficient models, blind speculation. They are going to all be left behind if there's not a shift, if there's not a change. And the firms that will dominate and have been dominating embrace real-time sentiment-driven analysis. This is exactly what Aether is building. And sorry, I'm also running the slides, so bear with me here, guys. So our flagship platform is Sentiment Trader. I know some of the people that are on at 10 Capital that attend are in the trading space, so you may even know us. We have over 20 plus years been trusted partners and work with institutional investors, retail investors, financial advisors. The platform is renowned for its proprietary data, and we're pretty well known in trading spaces. The current product overview that we have is broken up into 3 categories. First, we have research reports. Next, we have data and technology. And finally, we have actionable strategies, which are more made-for-you tools that are for the retail and, in some cases, sophisticated investors. The markets, they don't just move on fundamentals anymore. They move on human sentiment. They've always moved on human sentiment. Fear, greed, euphoria, all these things are what move stocks, bonds, mutual funds, whatever have you. And the data that is currently relied on is lagging at times, fragmented, and at times also irrelevant. This is where Aether comes in, and our platform helps investors make sense of all this data. Woody, I'll let you take this part.
So we operate in a high margin subscription-based SaaS model with tiered pricing for institutional investors, hedge funds, and retail investors. Our monetization strategy is built for scale, and we take our model very seriously. We're also forging enterprise partnerships, licensing our technology to financial firms that need AI-driven decision-making. This is a must-have financial infrastructure if you are active in the investment world. And this isn't a small niche either. The alternative data market is expected to grow over $50 billion by 2030. And institutional investors and retail investors are spending hundreds of millions annually to gain access to superior insights. The winner in this space will be the person who can provide not just data, but clarity. That's exactly what Aether is doing. We've been around for over 20 years. We have 3,000 plus indicators that we use and over 250,000 subscribers across our social media followers, with 10% of that being actual subscribers to Sentiment Trader, including some very high profile traders and institutional investors.
Okay, you're probably wondering about our technology capabilities. We talked about a lot about our data. As it says in the presentation, we are very efficient at data collection. We have 3,000 plus proprietary indicators based around sentiment analysis. Our analysts are some of the best in the game, highly quoted, well known, again, in the trading community, and they have an expertise in indicator creation. And really, when we talk about our technology capabilities, we believe that Aether is a game changer. We are building an AI-powered sentiment analysis engine. It will scan the entire information landscape for news, earnings, social media, and corporate language shifts. It will transform this data and make it into real-time predictive insights. And it's really, for me, it's like having a Bloomberg terminal, but instead of showing past data, we'll include sentiment analysis that will help traders make better and informed decisions. And as LeVar Burton says in Reading Rainbow, you don't have to take my word for it. So we are in the news and being quoted quite often. Our analysts are well known. They've been on CNBC, Forbes, New York Times, Wall Street Journal. All the major financial publications have knowledge of what we do. And also, and I'll move to the next slide, our client base, our subscribers. We have a pretty decent amount of very well-known traders. Some of the groups that actually subscribe to our services are the literal captains of the universe and masters of the universe of the trading world. And there's a big reason for that. It is very, very hard to put together this set of data. It is not something that anybody can just build overnight. And again, between our quotables on different financial channels, And between our, and this is just some of the few. We have many more. We just couldn't put them all in one slide. We have the confidence of our subscribers. So our growth strategies with Aether are pretty simple. Geographic wise, we are in the north. We are in North America. So primarily our customer base is Canada, America. However, we know that there's a massive amount of traders. We have the most traders in America. So we know that with what we're building here, as we make it more accessible, more ease of use for not just the institutional traders, but even for the average retail investor, and as more people come into the market, we believe that there's a huge opportunity here. And globally, everybody now is trading markets all over the world. So we do believe that there's massive growth for us. Also, we plan to, grow our advertising strategies, email, social media, and affiliate marketing. One of the big parts of Sentiment Trader is actually some of their newsletters. And, in the case of some of these newsletters, we have extremely high open rates. And we plan to really capitalize on this for growth and to attract more subscribers. Also, as we're alluding to, we are expanding into new technologies and international markets. We continue to invest in research and development. Our analysts, again, are constantly on the prowl trying to figure out what new types of sentiment analysis indicators can be created, and also capture new growth opportunities through strategic alliances and acquisitions in the coming months and future in general. And Nick, I'll pass this over to you.
Right. Just to reiterate what Frank and Woody has mentioned, the investment highlights for Aether is that we provide cutting-edge fintech solutions. We are very data-driven. We have advanced tech capabilities, and we have many years of experience in R&D and providing software for our users. We seek to merge humans' analytical skills with machine to better our users in terms of the trading game. And we are always looking to broaden our scope, i.e., in expanding ourselves to other markets and other regions in the world. Our competitive advantage includes an experienced and incentivized management team. We have a competitive position with differentiated business models, such as SaaS business model and licensing agreements with institutional investors. We have 10 years of deep research and development experience. We are always committed to innovate in the space, and we have multiple avenues to drive strong long-term growth. We have years of brand building and strong reputation with strong sentiment trading expertise. The team is led right now by me, interim CEO. I have Suresh Iyer, who is CFO of the company, David Ho, who is Chief Strategy Officer, Mr. Hu Hao, who is CTO of the company right now. We have a board of directors in still, myself as chairman, Jacqueline Wu is executive director, Justin, David are independent directors of the company. Our research team includes Dean, Jay, and Jason. All of them has been the Sentiment Trader for over a decade. They are very well versed in what they do, understanding what the market is, and they themselves are experienced traders and have always been featured in the media as well. Yep, Frank. Yep, that's all for me today. Thank you.
Oh, Frank, I saw your mouth move, but I can't hear you.
Yeah, sorry about that. So yeah, that's Sentiment Trader in a nutshell. And yeah, we're open to any questions.
Perfect. Well, that being said, we'll start off with Rajeev. If you have any questions or feedback, by all means, floor is yours. And if not, we'll move on to Ed.
No, I do have a question. I mean, you've been around for 20 years or so, right? So what's different now? And I guess I may have missed this, but what is the funding for, and how do you plan to leverage it?
Nick, do you want to take this or you want me to take it?
You can take this.
Yeah. So, well, first off, we're a little bit different than most of the companies that Hall is bringing.
I guess so, yeah.
Yeah, bringing because I'm sorry, I got the poll question here. I will take that off. Yeah. So we actually are not here for funding. We're in the process of an IPO, so we should be trading We expect to be trading soon enough. We don't know exact days. The funds that we are raising in the IPO, they're all going to go to, the strategic acquisitions to advance the AI side of the business and to leverage the data that we have. Also to expand the newsletter side of the business. We think there's tremendous growth in content and newsletter, and it goes hand in hand with our data. And also to grow subscribers. I think that right now, if you're building this kind of a platform, it's very important in ChatGPT with OpenAI, rather, with ChatGPT kind of shows us this, having strong subscribers gets you everywhere, right? So that is, part of the pieces of the puzzle. And what is different, to answer your question, honestly, I believe that what is different is technology has given us a place for us to be able to use this data that we have 27 plus years of, all the insights, all the reports, with the data sets that we have, we think that we can become, and we aim to become, one of the premier, if not the premier, financial LLM. We don't see why we can't be at least in the top of that puzzle. So I hope that answers your question, Rajeev.
And just real quick, I know we don't have that much time. We are focused on sentiment, right? Capturing sentiment from a lot of data, third-party feeds, right? And
third-party feeds for actually, sentiment analysis is third-party feeds, but we're actually going to expand that to even currently, we actually are getting feeds from Bloomberg, Thomson Reuters, FactSet, everything. We believe that although sentiment is we believe sentiment is how markets move. I think if you trade long enough, you realize that it's all it's a contact sport, and it's how people feel, right? However, we think that when you take these three indicators of sentiment, fundamental, technical, and you marry them and they're not correlated and you're getting the right signals, that's a buy, right? So we actually look to marry all of these things. And a lot of our indicators currently on the platform are geared like this. So it's sentiment is our lead indicator. This is what we're building off of. The market is a study of crowds, right? That's sentiment. So, but we would never discount the other two main forms of investing. And we also believe there's a lot of growth in sentiment analysis, because most people know technical and fundamental. They kind of gloss over the sentiment side of things.
okay. Well, in the interest of time, I'd yield the floor back, but happy to dig a little bit deeper and review your materials some before we talk. So thanks again.
Absolutely. We're open to it, man. We're happy to speak.
Thanks.
Yeah, no, if anything, we will be hosting breakout rooms right after this. So please, by all means, everyone who is here, stand back and feel free to jump into a breakout room and ask questions. On that note, though, if you didn't have any more other questions so far, Rajeev, we'll move on to Ed and Hall. If you guys have any questions or feedback, Ed, we'll start with you. And if you're still on call, then we'll move on to Hall. Hall, take it away.
Sure. So how do you drive adoption right now? What are you using to get more people using the platform?
Nick, you want to take this, or you want me to take it?
You can take this.
Okay. So right now, actually, how we drive adoption is through the newsletters. So we have, again, this is one of the reasons that it appealed to us to make the sentiment trader acquisition. We think the amount of subscribers they have on social media and for the free newsletter is that there's a huge opportunity to grow paid subscribers from that alone. However, we do understand, and we're actually bringing a team that has many years of working with the MarketWise, the Stansberry. These are newsletters with tens of millions, sometimes hundreds of millions of subscribers. So we put the right team together on the newsletter side, which we believe we are. We're going to capitalize on that. And that newsletter business is what's going to be the driver for the existing tools and also some of the tools that we'll build off of the platform to grow it.
Great. And so is there any network effects or virality in your current marketing, or is that on plan in some way?
There's definitely a plan for that. I don't want to get too much into it because, obviously, as you know, we can't take too much, but there's definitely a lot of opportunity for virality. especially in the days, the time of meme stocks. And, you know, it's, again, trading is the study of crowds, right? So we think that there's a plenty of opportunities for us. And as we create this content, you know, we think that our team is versed enough to, you know, get us viral once or twice in our lives.
Okay, great. That's it for me. I'll pass it back to David to ask the question in the chat box.
Yeah, so we have a question from Bob. It says here, it looks like the S1 was filled with the SEC on 12/30/24, so December 30th, 2024. Do you have an expected timing for your registration to be declared effective?
I'll take that question. Hi, Bob. Yes, we are working towards it. You will see an updated financials, well, updated S1 with latest financials in time to come, sometime around this week. But once we go with that, we should go effective sometime in March. But happy to
Perfect.
keep
Thank
you
you so-
updated in the process.
No, thank you so much, Nicholas. I appreciate that. On that note, Will Hall, we will start off breakout rooms. For those of you who do not know how this works, we will open up a breakout room for each pitch that went up today. So feel free to enter one of those pitch rooms or breakout rooms and ask away any questions, dive deeper into your conversations, and go from there. I will check in to each breakout room in about 15, 20 minutes and see how we're doing. Don't feel rushed, but again, take it as you will. And that being said, Hall, any last minute notes from you?
No, thank everybody for coming. I want to thank our panel today and all our presenters. It was a great presentation. Sorry for the technical issues on it, but I think we had a good event anyway. Thanks.
Perfect, guys. Well, on that being said, breakout rooms will open in 3, 2, 1. Until next time.